Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, talking about what's been going on this week, how things have been shaping up, what themes we're going to have for the rest of the week. So let's jump straight into it. I think I want to start by looking at currency markets, looking at the charts here. We've got the DXY pushing higher right now, and as you can see, it seems to be threatening a break above this downwards trend channel that has been dominant really since November. Well, I mean, the DXY's really been trending lower since last September, but does seem to be threatening an upside breakout towards the sort of mid 105s from just below 104. What are the latest fundamentals that are sort of behind this push higher that we're seeing? Well, let's look at the calendar right here, and you can see retail sales data just came in. You can see this month-over-month jump in retail sales of 3%, way above expected. And I believe that is the best month-over-month increase in retail sales in about 2 years. You can see also core retail sales also higher. And then we also had the Empire State Manufacturing Index for February, which was also not as bad as expected. And this, of course, comes after the CPI data that we had yesterday that was, well, the month-over-month jump in price pressures was in line with expectations, but, you know, it did confirm that there was a jump in month-over-month price pressures, and the year-over-year metrics were a little bit higher than expected. So on net, the US data that we've had out so far this week has been stronger than expected. We have seen, let me just show you, US 2-year yields and US bond yields pretty much moving higher this week. I mean, things are a little bit choppy. We're actually moving a little bit lower now after spiking to fresh highs since last November in the 2-year. But look, we've had this big move higher in the last couple of weeks from just above 4 to around 4.6%. And I think that, you know, with markets increasingly pricing towards the Fed taking interest rates above 5% and holding them there for some time this year and perhaps into next year, this 2-year yield, there's room for it to move higher to fresh post-pandemic highs. And that, I'm thinking, could probably be the catalyst for further upside in the DXY. I mean, we've already kind of seen this move play out in dollar yen. Remember, we were in this downtrend. We then broke out of the downtrend, and then I actually called when we pulled back here that I thought we could then bounce towards this target area around 134.50, which we've now almost hit. And if you look at euro dollar, this looks like it's about to break lower. And if you look at cable, also looks like it's potentially about to break lower if it breaks below its 200-day moving average. You know, we've just had UK CPI data, which surprised to the downside. That comes after, well, we had pretty strong UK jobs data out earlier this week. But, you know, that comes at a time when the US data is very, very strong. So, yeah, it does look like potentially the DXY could be moving to the upside. But let's look at some other asset classes quickly as well. Stocks, despite the moves in yields, despite the moves in the dollar, despite more hawkish Fed pricing, continue to push higher. And, you know, if we can hold above the 21-day moving average and in this trend channel, there is the potential for us to continue grinding higher. If you check out the video that I moved yesterday, I'll go into a little bit more detail about why I'm thinking that this move can continue. Gold, obviously very sensitive to the dollar and yields, continues to push lower. Looks like it could fall all the way back to 1800 to me anyway, now that we're below the 50-day moving average. And oil is within recent ranges, as I've been sort of expecting it to remain so, within this $72 to $82 range, as we weigh up things like the strengthening dollar, which is bad for oil, but then China's reopening and perhaps the US economy might not fall into recession. So that's reason for us to remain above these recent lows. But, you know, there's enough pessimism in the market right now to keep us from breaking out to fresh multi-month highs. In terms of what we got for the rest of the week, guys, let's just have a quick look at the old calendar. If you're an Aussie trader, jobs data coming up. US PPI, obviously inflation is always super important. If you're an Aussie trader, again, RBA governor speaking. And then, that's pretty much it. I think there's a bit of Fed speak that we should be on the lookout for as well. UK retail sales data on Friday. But aside from that, guys, we're just going to be monitoring to see whether these trend lines that I've just been pointing out or trend line breakouts like in the DXY or continuation of the trend line in the S&P 500 can continue this week. But yeah, guys, hope you found the video informative, and I will see you all in the next one.